Success is no accident. It is hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you are doing or learning to do. The soccer great, the legend, Pele, and he would know. One of the hardest working men in soccer. And as he tells us, success is no accident. We have to spend the time to get it. And how do you do it? In learning to read the charts, in becoming a charting master, a technical analyst of repute. You do it by spending 10 to 15 minutes a day with us. That is what it takes, my friends. And we're going to jump into these charts. Thank you again for all the orders for the book. You guys just keep buying it, and we appreciate it. It's the way you support us here at the channel, that and your Patreon support. Thank you so much. Let's jump into these charts. We see stocks and bonds are down for the day, gold up a little bit. Let's jump first in the S&P 500, down 0.21% for the day. We have a red spinning top that is forming after an attempt at a weekly vertical crossover this prior week, pretty much laminated. And those of you are asking, what exactly is going on? My friends, one of the craziest elections in one of the craziest times in my life, maybe the election of 1864 was this crazy, or 1860 even. That was when Lincoln won his first and then his second election. But again, just insane times that we are in. Price percent oscillator looks like it's pretty much laminated at this point. That means it's sitting right there on the red signal line. Derivative oscillator still negative on the weekly chart. Go to the 2-day on the S&P. Now again, remember, the prior 2-day candle ended on Wednesday. This latest one will not finish drawing until the close of the market on Thursday. What's it going to do? What's really going on? Is there going to be another stimulus? Is that going to fuel the market for more of a rise? We don't know. We just see the market in flux, sliding sideways, tending down right now on the 2-day chart. And again, sideways on that weekly chart, not getting enough momentum to push on through the weekly. And you guys have seen how over and over and over again this year, our crossovers have worked. And again, this is a strange, strange time as we get closer and closer to the November election. I voted yesterday. Hope you are out voting and speaking with your vote. Very important. Most places you can vote now. We voted early. Here where I live, we have early voting. And again, knock it out whenever you can. So what do we see? Derivative oscillator losing momentum. Price percent oscillator looks like it's trying to cross over. May make it by the end of the day on Thursday. That, of course, would immediately pull away from any weekly vertical crossover because the 2-day and the weekly have to be going in the same direction. Again, derivative oscillator still positive. Price percent oscillator positive but heading down. Go to the half-day chart. Of course, it crossed over going down back on the morning of the 15th, popped up and then slid back over, but the price percent oscillator stayed down the whole time, even when we had the weekly vertical crossover on Friday. We noticed and mentioned this, and again, told you that hesitation jumping in was fine because the 4-hour chart was heading down at that angle at the time and did not, again, comport with the jumping in point. Now, many times we throw that out the window, but this time of year, with as weak as things have been in the immediate pop around, again, that's why we want you to practice these things. You learn the nuances by doing the practice. How do you do the practice? You print out your trade worksheet, your daily market worksheet, your trade worksheets, your weekly market worksheets. There's 3 of them. They're all provided in your show notes every day. Those PDFs are there. You can print them out. You can also order a bound 3-month journal that we have that we can sell you, but for free. You can print them out yourself. They're in your show notes. Go ahead and sign up at chartingwealth.com to our daily review. It's absolutely free. And in fact, the training that we have for you today is how to master the charts. I tell you what, 101. Be good for you. If you don't have that, please, if you haven't taken it before, please take it. Absolutely free and available for you. So that's where we are on the S&P. Things in flux, big time in the market. Watch that 2-day chart tomorrow to see if it crosses over going down. Keep your eye on things. Maybe we'll have a bounce off that would make it easy to jump back in. Maybe a bounce off on the 2-day. That would be a recross potential. It would be similar to a recross. And maybe if the market really gets fueled up, we'll also see that half-day chart cycle over about the same time that the 2-day recrosses. Who knows? We shall wait and see if that occurs. Be ready for it. Now we're back to the weekly, going to the Nasdaq 100 down, the least for the day, 0.08%. We have a red open box candle. That open box candle means a slowdown in the up movement. You can see the price percent oscillator. I'd say it's a little less than flat. Derivative oscillator still negative, losing downward momentum. Go to the 2-day chart. Look at that. It may very well cross over going down by the close of the market on Thursday. If so, what does that tell you? That's a 2-day recross going down. Might give you a jumping in point going down. Watch. Let's see how things play out over the day on Thursday. And again, that is not as strong as a weekly vertical crossover, but a 2-day recross works many times. Do you know how often it works? Well, that's what we call backtracking. I'm going to make a note right now to put that training at the end of today's video. That is a great training, backtracking. It talks about how you can go back in time using the charts historically to let you know the percentage of how often those 2-day recrosses work. And you want to make sure they work a large majority of the time before you ever think about relying on them. So that's where the 2-day is. Price percent oscillator heading down may cross over at the close of the day on Thursday, and the derivative oscillator heading down. Look at that. Price percent oscillator on the half-day chart. Man, it's spiking down. Derivative oscillator losing a little downward momentum. But look at where things are sort of landing. You see where the low hit back on the afternoon of Monday, and it's really not tapped that again, showing you a big sideways slide and maybe a floor. So again, pay close attention. Note that in your daily market worksheet. And again, get ready for a potential practice trade tomorrow. Again, I encourage you to do all the practice trades you can do. They are free. And when you get into these trades and you follow them like you have real money on the line, that is when you really learn the nuances, the essence of what it is to track a trade. Now, let's jump into TLT 20-year bonds. It was down 0.35% for the day. We see on the weekly chart, price percent oscillator heading down, derivative oscillator gaining downward momentum. We can see a red candle forming for the week after a green close box candle spinning top the prior week, indecision. And now we see things heading down. Are we tapping? We're actually going a little below. Well, let's make sure. I'll tell you what's confusing there. Let's look at the low. The low this week, 158.37. The low last week, 158.68. So yes, we've gone a little lower this week. We go from the weekly to the 2-day, and of course you can see where it's spiking over, heading down. And we go to the half-day chart. We talked about that half-day recross. That did occur back on the 20th. How many of you guys jumped into that and have watched that accelerate down for you? That is good. It's the weakest reason to jump into a trade, but it did offer you that. See how that works, and again, be careful. Watch that as it continues to move down. Now, what bonds typically tell us when they move down is that stocks will be moving up, because money tends to flood into bonds when the stock market is not doing well. So the opposite is when money comes out of bonds, it's typically because the stock market is doing good. Now again, these are strange times. Of course, what do we see when we have a systemic crash? Well, people have margin calls. Everything goes down. Gold, bonds, stocks, ETFs, you name it. And again, that's what we saw during the COVID crash. So that's where we are on bonds. Going to go back to the weekly. Lastly, we go to gold. Up for the day, the only up for the day. 0.75% for the day. And where are we as we look at that weekly chart? Price percent oscillator still heading down, derivative oscillator losing downward momentum. We have a green open box spinning top, really a lot of sideways moving. It is moving up a little bit as far as the Heikin Ashi candlestick goes, but that all-important price percent oscillator still heading down. What's the 2-day show us? 2-day getting closer and closer. And again, 2-day crossover has to happen almost always before the weekly crosses over, getting very close. That may very well happen by the end of the market on Thursday, so pay attention to that. That may mean gold's getting ready to take off again, so watch that. Price percent oscillator heading up, getting close to crossing over. Derivative oscillator already positive. And what do we see on the half-day chart? Booming up in the morning, slowing down in the afternoon. Price percent oscillator heading up, derivative oscillator gaining upward momentum. So watch gold. Watch gold. Let's watch it all, my friends. This is what it's all about. This is the most fun I have many days. And that doesn't mean I have a boring life. This stuff is exciting. I don't need to go to Las Vegas and take crazy chances. I can have a great time following these markets, hedging myself up against some of the best people in the world and these markets themselves, reading these stock charts. It is loads of fun. You can do this for free, doing your practice trades. And again, all sorts of great information at our website. Great trainings we put out for you every day. Make sure to subscribe at chartingwealth.com. That list is never spam, never shared. And again, purchase our book, support us here. And of course, if you really want to support us, become a Patreon supporter. We have a 3-part series, Options Made Simple, the Charting Wealth Way. You want to learn options? We have simplified it and again given you the gold nuggets you need to be able to start successfully practice trading options and really learning how to use them. And that is available for free for our Patreon supporters at any level. Follow the link. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.